goals. Learn about diversification, asset allocation, and risk management to help minimize risk and maximize returns. Investing your money is an essential part of achieving long-term financial goals. However, with so many investment options and strategies available, it can be challenging to know where to start. In this article, we will discuss some of the best investing strategies for achieving long-term financial goals. Strategies such as diversification, asset allocation, and risk management are essential for investors of all levels. Diversification. Diversification is a fundamental investing strategy that involves spreading your money across a variety of different investment types. This can include stocks, bonds, real estate, and alternative investments. Diversification helps to minimize the risk of your portfolio and can help you achieve more stable returns over the long term. One of the most popular ways to achieve diversification is by investing in index funds, which allow you to own a broad range of stocks or bonds in a single investment. This is a low-cost way to achieve diversification, and it is an excellent option for beginners. Asset allocation. Asset allocation is another crucial investing strategy that involves dividing your portfolio into different asset classes based on your investment goals, risk tolerance, and time horizon. This can include stocks, bonds, and cash. Asset allocation helps to balance risk and reward, and it is essential for achieving long-term financial goals. One popular method of asset allocation is the 60-40 rule, which involves allocating 60% of your portfolio to stocks and 40% to bonds. This is a good starting point for most investors, but it is important to adjust your asset allocation based on your individual circumstances. Risk management. Risk management is an essential part of investing, and it involves understanding and managing the risks associated with your investments. This can include market risk, credit risk, and liquidity risk. By understanding the risks associated with your investments, you can take steps to minimize them and protect your portfolio from losses. One way to manage risk is by investing in low-cost index funds or exchange-traded funds, ETFs, which provide broad exposure to the market while minimizing the risk associated with individual stocks. Another way to manage risk is by diversifying your portfolio, as we discussed earlier. What are the best long-term investment strategies? The best long-term investment strategies typically involve diversification, asset allocation, and a focus on minimizing risk. By spreading your investments across a variety of different asset classes and minimizing risk, you can achieve more stable returns over the long term. Other effective long-term investment strategies include investing in low-cost index funds or ETFs, taking advantage of compound interest, and maintaining a long-term perspective when making investment decisions. Ultimately, the best long-term investment strategy will depend on your individual goals, risk tolerance, and time horizon. It is always recommended to consult with a financial advisor before making any investment decisions. How to invest for long-term growth. Investing for long-term growth requires a specific investment strategy that focuses on stocks and other assets that have the potential for significant appreciation over an extended period. Here are some tips for investing for long-term growth. Start early. Investing for long-term growth requires time. Starting early is essential because it gives your investments more time to grow and compound over the long term. Focus on high-growth companies. Investing in high-growth companies is an excellent way to achieve long-term growth. These companies have the potential to provide significant returns over the long term. Invest in growth-oriented mutual funds or exchange-traded funds, ETFs. Mutual funds or ETFs that invest in growth-oriented companies can be a great way to gain exposure to a variety of high-growth stocks. Consider dividend-paying stocks. Dividend-paying stocks can be a great option for long-term growth because they provide regular income in addition to potential capital appreciation. Diversify your portfolio. Diversification is essential for any investment strategy, but it's particularly crucial when investing for long-term growth. Diversifying your portfolio across different sectors and asset classes can. Investing for long-term growth requires a specific approach, but it can be an excellent way to achieve significant returns over an extended period. By starting early, focusing on high-growth companies, diversifying your portfolio, and regularly monitoring your investments, you can build a portfolio that is well-positioned for long-term growth. What is diversification in investing and why is it important? Diversification in investing is a strategy that involves spreading your investment portfolio across different types of investments, such as stocks, bonds, real estate, and alternative investments. The goal of diversification is to reduce the overall risk of your portfolio by investing in different asset classes that are not correlated with each other. By investing in a diverse range of assets, you are less likely to experience significant losses in your portfolio due to the poor performance of one particular investment. For example, if you have all your money invested in one stock and that company performs poorly, you could lose a significant amount of money. However, if you have your money invested in a diversified portfolio, the poor performance of one investment will not have a significant impact on your overall portfolio. Diversification is important because it helps to minimize the risk of your portfolio while still allowing you to achieve long-term investment returns. It is a way to protect your investments against market volatility, economic downturns, and other unforeseen events that can impact individual companies or industries. By diversifying your investments, you are able to achieve a more stable and predictable return on your investment over the long term. Overall, diversification is an essential part of any successful investment strategy. It allows investors of all levels to manage risk while still achieving their long-term financial goals. Conclusion: investing your money is an important part of achieving long-term financial goals, and it is essential to have a solid investment strategy in place. Strategies such as diversification, asset allocation, and risk management can help you achieve stable returns over the long term while minimizing risk. By taking the time to understand these strategies and incorporating them into your investment plan, you can achieve your financial goals and secure your future. Remember to always consult with a financial advisor before making any investment decisions.